All right, so we're going to be going over the Nasdaq 100 and the SP 500. We're going to go over what happened on the day. We actually had a little bit of a gap here on futures, pushing us up, making a new local high. But as market opened, obviously we saw a lot of red, a lot of blood, increased volume to the sell side. We need to talk about what's happening here and how we're going to be moving on these indexes as well. It's important to know today you will have earnings. You will have Netflix earnings a little bit after this video is posted. Chances are you probably will have those earnings released by the time you watch this video. So let's talk about exactly what we're looking at. Now, going into this, we're going to be looking at Netflix specifically. I was talking a lot about this. This is your earnings you're having. Now, I want to emphasize here, Netflix, I do believe if earnings go positive, there's two outcomes, obviously, a positive and negative. And I know you're going to say, Tyler, well, are you betting on either? I'm not betting on either. I want to highlight, there's a few things happening here. You have a massive gap to the upside. If Netflix outlook is good, in my opinion, you will see over $300. If this is any type of decent earnings call as far as the outlook, I don't anticipate their earnings to actually be good numbers wise, but outlook, I'm interested with the ad revenue and what they're doing there. Now, if it's bad, it's probably going to get hammered. It's probably going to start retesting these lows pretty soon if this goes absolutely terrible. We'll see what happens, but overall, this will greatly set the tone for the market. I've been saying this since yesterday. Just know, I'm going to repeat myself. People get upset here when I repeat myself, but Netflix will set the tone on the entire market going into tomorrow. So make sure you're watching earnings. Again, today I am liquid. I have nothing, no positions. I always share my positions. I can go into Discord and show you as well. We come in here, we can go down to my specific trade section. Nada, nothing. I literally went over yesterday as well. Imagine trying to day trade a $1 trading range. Terrible, right? So as you get back in here, let's talk about what's happening. Let's talk about what we're seeing here. On the 5 minute, I want to just go over the intraday action, right? So you can see right about here is where market actually ends up opening, right near these highs, and then you plummet, essentially coming right back down to your previous overall demand near those previous June lows. These were your previous lows established in June, coming down, double bottoming, pushing back up. Now, again, I always recommend that you guys follow the Twitter. I'm trying to post more for you, so make sure you're following. The link is down below. I had to make a new Twitter. Anyways, going into this morning, all day I'm keeping you updated going over these. So I just wanted to just highlight this really quick. I mentioned going over this. These were our key levels, 11.25 going up to 11.5. As we progressed, again, I kept everyone updated going in here, came back down, retested. Guess what? Ended up breaking back below and getting stuck below this area. Again, kept everyone posted all throughout the day continually. Remember, Twitter, it's there for all you, absolutely free. So as you're getting there, you're now stuck below this key level. It's worth mentioning, 11.25. What is this level? Go to the 15-minute chart, zoom in here really quick. It's your high that you established right here on Friday when we had the really nasty dump. It's also your demand that you have established back on the 7th of October. Okay, so as we come in here, next up, I want to go over the broad range. This is the daily chart showing you what's really happening here. Ignore some of the trends down here. This is the auto trend tool that they have on TrendSpider. Absolutely love it. Just makes things a little bit more accurate, and it's all based on an algorithm, which we love to see. Now, you can still see we're obviously in a downtrend on the larger scale here. Your high from August. Zooming in here, I want to talk about the trend we're in now, and I mentioned this yesterday. It was very interesting, right? We have the upper trend. Where is your, if you get the breakout of this downward trend you're in now, we're looking for an upside push towards 11.6, 11.7. However, obviously you did not get that today. You got rejected right there at that line. So you're still very tight, and you can see a lot more downside here, maybe towards 11.0 or 10.02, 10.03, which again comes back down into our demand, which we had mentioned before. Now, overall in the market, I want to be very clear. I'm very bearish on a broad scale of the market. However, we have to acknowledge, based on the earnings coming up, what do we have to acknowledge? That we have to see the possibility for upside. I want to try to find those earnings for you guys. Go to Earning Whispers really quick. If you don't know, this is a really great follow on Twitter, and it's going to really help you see all the earnings as they come out, each week. It's going to have a really nice calendar. This is what I use for you guys. So Netflix today on the after hours, Tesla tomorrow after hours, Snapchat Thursday. A lot of stuff coming in. Next week's going to be a lot of the same as well. More and more and more. So these are things you need to be looking out for. And as you come to the market, I want to start talking about what's happening with the options chain. What's happening with big money? What are they doing? I talked about yesterday. You weren't seeing a lot going on with SPY. Even today, interesting behavior here. Put to call ratio, I talked about this being more bullish lately. And today, you're seeing the put to call ratio get even closer. But you're seeing a lot of calls coming in. This is very green. This is pretty decent. Where it gets interesting, though, is we go to Qs. And this is something we haven't seen lately. Very bearish. Heavily in favor. November, January, December. Lots of 2-3 month out puts coming into the market that are very heavy. And they are aggressive sweeps as well. This is cause for concern and bearish in my opinion. Okay, I want to make that really clear. This is bearish behavior on a broad scale here. I would be concerned here. Looking at VIX, we'll talk about this here in a second. Still, people are betting for upside pressure. You did have one put come in here for 11.16. Pretty weird day for that to come in there. Probably a hedge. Would keep that in the back of your mind. SPX, not too worried about this either. More day traders, things happening there. So that's what we're looking at. So for my broad scale, as we look at the trend, right, I want to make sure everyone can just see what we're looking at. Again, I would ignore the bottom part of this, but as we see the overall trend that we are in and where we're getting rejected from, it's very clear in my opinion that you're still seeing the downward pressure, okay? It's very, very clear. So when people say we're making higher lows, we're this, for that, in my opinion, you're not. You're continually getting rejected, especially based on volume as well. As we look at volume, you can see here also, as we get the quick refresh, you can see we'll probably end up near 90 million on the day, still decreasing since we had that major volume day on Friday and Thursday of last week. Decreasing, getting this move. Again, what does it usually mean when we're on our charts and we are decreasing in volume for continuation? It usually means we are continuing and getting another type of continuation pattern back towards the downside. You could argue as well, this is a sort of bear flag being formed here. I would consider more of a wedge of sorts, a little bit of an ascending wedge. But in my opinion, I still think you're seeing descending volume to the upside as you're pushing up. Buyers are not pushing you through. You can't get above any of these key levels and you're getting pushed back down. In my opinion, it's looking for continuation. But again, you have got to be watching these earnings calls. Now, next, when you look at Bookmap, what's happening here? Again, on the broad scale market, as we look here, very interesting behavior on the morning. Very, very interesting. So all morning, CVD was getting hammered. Before you even really started dumping on the market, our CVD was getting just absolutely hammered. You were very red. Also, hidden order book, dark pool data, things like that, icebergs. You're seeing a lot of shorts all morning long. All morning shorts. This blue line on the downside is heavily in favor of shorts. You don't see very much call to action by buyers. You see a little bit near the end of the day, but not much. Again, leading me to believe that big money is positioning themselves for more downside. Now, yesterday, I got a little bit of flack, and that's okay. I want you guys to comment your opinions here. I would love to see your opinions, things I could change on the channel, etc., right? I would love to see that. However, I was getting a lot of flack because I said that I was sitting on my hands and I was honest with you. Again, when you come to this channel, you have to know one thing. I'm always gonna be honest with you. You're not gonna be able to come to the channel and say, Tyler, you lied about this yesterday and you didn't fess up to it and you're scamming people, right? You're never gonna be able to say that about me, right? Because when you come to the channel, I'm giving you my honest opinion about how I'm trading and what I'm looking at. And what did I tell you yesterday? I said I'm sitting on my hands and I don't know how we're gonna play out with these earnings. Again, why is it smart to sit on your hands? As we come back to Discord, look at this behavior. This is a real chart I posted on Twitter as well for everyone. You are literally day trading on SPY. This is yesterday's action in a $1 range up and down. Granted, today you got a little bit better action. As we come in here, it was solid action. You went up, you came down, you kind of bounced up. It wasn't bad. However, you need to understand you're moving very volatile right now and you're not getting follow through with volume, right? So you want to see volume leading you. When you're seeing volume lead the market, lead the indexes, it's a much better environment to trade that trend. When you're not getting the follow through volume and the continuation type volume, then you put yourself, in my opinion, in territory to set up yourself up for failure. That's what you're ultimately doing there. And that's my opinion. Do what you want with it. That's just what I'm looking at. Now, I want to just talk about where you're at as well as we look at more time frames on ES, S&P futures. So look at what's happening here. We can look at our demand zones. This is on a 4-hour chart. I'm going to go into about the 15 minutes to show you some of this price action in here. As you come in, you are still getting hit. right? You couldn't even come to our major demand up here. You're still getting kind of rejected right here. It's also important to know as you're pushing up to these higher levels, there's a lot more demand up here, right? That's not as illiquid as it was down here. So when you're trading to the upside, it's very limited to where you can trade to because you have so much more resistance. If you can get above this range, about 38.30, 38.40, then we'll talk about being very bullish and pushing back up to maybe 39, 4,000. But as of right now, you're not. So until you get some good earnings to help you push up, you can't. The long potential here is not worth it. Now, again, you don't really want to short here because you don't know what's going to happen with this earnings. However, what I will say to you is I think it's more probable that earnings come out bad than they come out good. I want to make that really clear because the whole market is hurting based on consumer strength. And if you look at what's happening, everyone's counting on the strength of the market to continue because of the strength of the consumer. Even though inflation is rising, consumer debt is rising, consumer credit is through the roof, and savings are below the bottom dollar, right? Huge concern across the board there. But when we look at this, they're still saying the consumer is the strength. I would argue the consumer is the chip in the armor, the major red flag, because once the consumer gives out, who is going to try to hold this market up? We have no more room for stimulus, and it's looking more and more likely that things could get absolutely terrible. So we're looking at ES. I want to talk about where we're at now. Of course, you're in a very sticky kind of area because you've been trending very slowly upside. So when we look here, you will have demand locally around 36.90 roughly, and that's kind of where you're bouncing here. You can actually see the behavior and how you're bouncing in this region, right? But I don't even love this area. I'm targeting more of the lows down here back at 36.10. That's where I would love to see us go. I also want to highlight, as you go back to NQ, the line in the sand that I would be watching profusely. 11.06. This is your June low. If we go to the daily chart, this is going to be a major inflection point on the chart. Your June low right there. You need to be watching this. If you get below this, I am extremely bearish, specifically after earnings. If we start going through some earnings and they start going bad, for instance, through Netflix and Tesla and even Snapchat, I assume the rest of earnings season will be in turmoil and we will have some pretty nasty downside. And it will highlight the weakness of the consumer because if these earnings don't show strength, that means only one thing is happening. The consumer is weakening, okay? So I hope you all understand exactly where I'm going with this and the whole ideology of what I'm doing here, right? So next up, I do want to cover VIX. What's happening here? Now, a lot of people have been talking about VIX, and I think I've been covering it quite a bit as well. VIX is moving wild. This is one of the weirdest times ever for VIX. Again, I want to highlight how this has been moving over the past few months, even the years, right? You can see since August, since this trend has started, you have made consistent higher lows. This is strange to say the least. You had somewhat of an instance back here in February when you went completely bearish for the first time and things went crazy. But I'll mention this is far more extended here. Almost 3 months now that we're sitting in this range, getting ready to bounce back up and you're back on the trend. Now again, grain of salt, take it for what it is, do what you got to do. I'm watching this as well. In my opinion, VIX stagnating like this, even with the upside that we've had and you're not getting major pullbacks here on VIX, it leads me to be concerned. Okay? I have to be concerned on the market with the way that this is moving. Again, I want to highlight, I have no positions. So again, I'm not dumping money into the market. I'm waiting to see what happens through these earnings and how these get reported. But ultimately, all signs still point to more downside. Looking at DXY, again, today, it's important to realize the key areas we have marked. Again, if you're on Twitter, you have these alerts because I posted them, and you have these charts as well. You're bouncing almost a double bottom here as well at 11.8, okay? And you're bouncing, so this is good. Again, if we start seeing earnings go bad, I have to assume that you'll start to see DXY pop up as well. I'm watching all of these right now. And it's also worth mentioning, I want to be really clear as well. We can go back to yields so you can see the yields are not inverted right now. They're a little bit below inverted. You haven't seen the volatility kick in yet. Worth mentioning, would keep an eye out there for the yields as well. But overall, there's no clear direction yet. And even with the breakout that we had here, I want to highlight this. Even with the breakout we had in the after hours, I pointed this out on Twitter as well. You broke above, retested those previous highs, pushed up, looked extremely strong into market open. But what happened shortly after market open? You sold right through and you re-lost that area. So right now, in my opinion, you are waiting for these earnings, and that's what's going to dictate here. Again, earnings start to set a bad tone. I think Netflix will be really the leader in this. You will start pressing back down to new lows. My personal opinion. And I think it will happen in a hurry. Okay? In a hurry. Again, I'd be targeting these local levels around 10.08. First, if you start getting below this, you need to start watching for the levels down at 10.05. That's your next big level where I'd be watching, and it definitely will be tested if you start to see earnings get tore up in this market. Okay? Make sure you're watching out for that. These are big areas that I'm watching. Everything I'm looking at as crystal clear as possible, right? Now, people are asking about stocks, things I'm liking, equities, etc. Now, I posted some equities and some different stocks I was liking on Twitter, and I'll probably start doing that more often if you want to see those charts. Because right now, you're just not getting follow through. So me really even talking about these at the end of my video, it's extremely difficult, right? So you're not going to be able to get that information quite as clear. So as we come in here, I will talk about a few things I'm liking. One of my favorite stocks, I think semiconductors are the way to go right now. They just move so good. Even when you started breaking out of this flag this morning, went from 120 all the way down to 116. You had a lot of opportunities here, okay? AMD, another big player here. You had really great movement this morning as well. So these are just stocks that I would highlight to be watching. Tesla would be off my chart until earnings are done. Meta as well, very weak. You pushed up to pre-COVID highs or pre-COVID lows, I believe right here at 138, and then you drop down. Extreme weakness getting back below 134. So as a whole, in my opinion, the market is showing a lot of weakness, not just with indexes, but with equities here as well. Even though indexes are trying to hold a pretty big level. I mean, you're actually, all things considered, indexes look decent. You're sitting at local highs. You look strong. However, equities continue to show weakness, which has my concern.